It has all my stuff. If someone can record, it would be great. For those who are not here, we go over it today. But please let it load. Oh, I got an idea.
Yükselci sahasına doğru meseleyi ceza sahasına gitmişti. Bireyle oynama kararı.
All right. There we go. That was yes. Oh, we're gonna go over market maker models as well, all right, guys? We're gonna go over market maker models, which is the most important, not most important, it's the most loved thing. It's the easiest trades you can get, but it's the easiest to identify, all right? So let's go ahead and just remove everything we had. Today we were extra accurate, even though it was a no-news day. We were extra accurate. The algorithm was just efficiently delivering price from place to a place, like to the text. All right, guys. So today, go on here. All right, today. All right, today in the morning. I think Emine caught this one. Also, one of my other friends live. I was sleeping, but what happened here is we swept previous session high. Okay, as simple as that. We're in London. You open a chart. Asia, I think most people are sleeping, so we just disregard Asia. It still works, but disregard Asia. In morning, during London time, we got London. We went over the previous session high, right? You went over the previous session high. And then step 2 was we get a chosh, which is right there. Step 3, do we have an FEG? Yes, there was an FEG. It has been mitigated right there. But during your time of trade, you will see a small FEG being printed out by Lux Algo, all these free indicators for you right there. Okay. So what do? Well, as soon as we get a chosh, you enter the chosh, you place your stop loss. It's simple as that. You can put alerts. I showed you how many alerts we got, guys, today. We got a lot of alerts today. So many. Oh, everything's automatic. Okay, everything's automatic. You place your stop loss at the high, just like that. And you would target your 200 ticks or 100 ticks, right? At 100 ticks, you can close your trade for $500, put stop loss at break even. Oh, sorry, close your trade fully at 100 ticks, take your $500 and get out. Or once it reaches 100 ticks, you can put your stop loss back to break even, and you can continue for 200 ticks, which it didn't give to us, unfortunately. And this is something Martin has been backtesting for a few months now. During London, aim for 100 ticks only. For New York, you can aim for 200 ticks. Okay. Anyway, let's go back. So that was a winning trade, just like that. Okay. Right. Just like that. Now, I was asleep for this trade. Okay. Let's say you woke up around here. Well, we stopped previous session high. We had a chosh, but we didn't take this entry, right? We were asleep. There's another chosh right here. You can take this chosh as well. You can take this chosh. Why can you take this chosh? Because the actual liquidity pool, the actual target, has not been achieved yet. So any chosh, if you miss one, you can still take this trade. All right. So you can enter here if you were late for the game, and it will still deliver the price almost in a single line, right? 150 ticks. Okay. Just like that. Because this target has not been reached yet. All right. Until this target is reached, all shorts, any possible shorts, even if you use your own strategy, you can still take these shots. All right. So that's been done there. Okay. Hold on. And I missed something about my levels. All right. Yeah. All right. So that's done. That was for the first trade. Now the second trade, which I was awake for, and everyone was awake for, is what did we do? In New York AM. New York AM opened at 3 a.m. Okay, it opened at oh, there's something wrong here. Is my time zone different? Oh, some Muppet changed this. Hold on. Give me a second.
I don't like calling people Muppets either.
Yeah, sorry, my bad. It's 3 a.m. my time, in Turkish time. In New York time, it's at 8 o'clock. Our New York session will open, right? New York AM session will open, right? So print out. There we go. All right. So New York time, London closed at here at 8 a.m. 8 a.m. The new session opened, which is this time is the New York AM session, right? What did we do? Here we wait for a sweep of previous session low or previous session high. In this case, what did we do? We swept in New York AM. The market went up, went up, went down, went up, went down, went up, went down, and boom! At this point right there, we swept previous session high. All right. So we should be looking for shorts. Did we just enter a short right there? Nope. We entered a short right there? Nope. Right there? Nope. Right there? Nope. Nope, nope, nope. Oh, big candles, double, triple candles. Nope. Equal highs, double tops. Nope. We don't enter. All right. We have to get our confirmation. What do you wait for? You wait for a chosh. This is sweeping the previous session high will give us 25% chance that the market wants to reverse. Okay. I have to meet someone. Hold on. There's someone. Gerald. You guys can still see my screen, right? Yeah. So what do you do here? You wait for a chosh, okay? The chosh will give us is a change of character. It's just basically a shift in market structure. What it means is we are bullish at this point, we're bearish, okay? That's all it means, okay? We were bullish at this point, it's bearish. We're bullish at this point, we're bearish, okay? It just changes the direction. Just that's what it does, okay? So that gives us another 50%, a 25% chance that the market does want to, in fact, reverse. So that's now we have in our pockets 50%. The other remaining, but still, it's 1-to-1, like gambling. You either win or lose, right? I still don't like that in my trading. So I want to wait for another 25%, and that is this FEG. If we get an FEG, that means that breaks this, that forms the chosh itself. You can see this is our chosh, high, higher, high, lower, low. This swing low right there, once we break it strongly with a big aggressive candle, we get a chosh, right? Right. Normally, you can get also this chosh with a small candle, not without an FEG, okay? But when you get it with an FEG, this shows you that institutions are interested in selling this area. Okay, they have your back. They're literally sponsoring. You have institution sponsorship behind your trade. So you would expect really fast movements without even any single retracement, right? So what do we do? What's our steps? Step 1, sweep of previous session high, which we did there. Step 2, chosh right there. Step 3, FEG. Yep. Okay, we enter exactly at the chosh. That's it. Chosh closed right there. You wait for the candle to close itself. This candle closed, 5-minute candle closed right there. You'll be entering at the start of this candle actually, but you'd enter right there, stop at the high, and you would target your 200 ticks. Okay, where's 200 ticks? Right there. Okay, just like that. That's 200 ticks. That's $1,000 with a single contract. So I've seen people trading 10 contracts, 15 contracts to make 1K or to make 500K. I was one of them, by the way. This gives you with one contract 200. If you take 5 micros, which I did, I was able to make. I took at 100 ticks, and I made my $250. Right, that's it. On my 900, on my 150K account, I took with one contract, and I threw all the way to 200. Just like that. Okay, just like that. Depending on your account size, you can handle. If your stop loss allows it, you can take this trade. Our stop loss is 200 ticks, so we were risking with 1 mini 1K, so we cannot trade this on the 50K account. So we can trade 5 micros on the 50K account and 1 mini on the 100K account, or on the 150 account, we can go with more contracts, right? Or let's say you are up 200, $300, 200, $300. So now your maximum daily drawdown on top step is 1.3K. Oh, by the way, on Apex Trader, you can take this trade because you have 3K of drawdown. But on top step, we have to be reasonable. This 11 ticks would be 1,000 and a little bit, like $1,020 or something. So it's still above our daily limit. So I took 5 micros just for that reason, and I was able to take that trade. All right, you can see it went much more. Now, do you trade it like this? No. Well, how do you trade this, guys? How do you trade this? What you do is, once you get your entry, you would target 100 ticks. You put a line at 100 ticks, just like that, and another line at 200 ticks, something like that. Now, once the price reaches 200 ticks, you see in the same candle, you hit 100 ticks. It didn't even take you 1 minute and you made 500 or 1K, right? You move your stop loss to break even, and now you let the trade. If you want to hold to 200 ticks or more, you are risk free. Now you can let the trade go all the way to 200 ticks. And it did it in the same candle. I don't know if you guys can see. But in the same candle, it went to 200 ticks, right? Just like that. It was almost nothing. While everybody is saying this market opening, big gaps up, we're just mooning, we're going to go to 1900, 1800, blah, blah, blah. No, guys, the market, you have to be reasonable. you have to expect a Judas, all right? A Judas swing. You have to expect that market has to sweep premium session high. This whole move was to induce people. It was to make it look hot or make it look sexy that the market is everything. It's just we're going up. Bullish candles everywhere. We should be going long, right? I think some people fell for it. I would have fell for it, but we were all watching the sweep of previous session high, which is the London high, right? This is more valid on NQ. By the way, these are IPD levels. You can sorry, these are not IPD levels. By the way. Yeah. So if I go to ES, you will see a similar scenario happen. And ES had a max market maker buy model in there. That's why I was against anything long. I was telling you guys we're going to be looking for shorts, okay? But market has to go long first in order for us to go short. And we waited for it on this thing, and everybody was like, "We're going trying to go long." We were waiting for this candle to go down, and it gave it to us literally 10 minutes later. Now, in ES, same thing. In ES, right there. Okay. Sweep of previous session high. I don't know if we stepped out. I really can't see. No, we made equal highs. All three equal highs. We did not sweep London high. Sorry, Asian high. But what did ES do? ES went down. It went to our maximum target actually, but it didn't sweep, so we didn't take that trade. That's gonna look weird. So let me do it like this. Now, what did ES do? ES went below previous session low, below Asia. Nice. That was our step one. Step two. What is step two? Step two. Step two is Josh. Nice. Step three. Do you have any FVGs? Yes, we have a small FVG right there inside the just right there, and we have another one right here. And either one is fine. There's another multiples one here, but we always use the ones before the Josh. So do we have any FVGs here? Yes, we do. So we take our entry at the Josh candle. Where's the Josh candle? Right there. First stop loss at the low, and you would target previous session high. I don't know the ticks on ES, but I was engaging everybody to take TPs at London high, and the market went straight there. And I think that's 5 ticks. Sorry, that's 22 ticks. So that's about with 1 mini. That's about $500. But of course, the market went all the way up to here, almost 2 RR, and it gave out to just north of 1.3k. Okay, with a slow ride, you can see it. Okay. So that's that I wanted to show you guys. Now let's see if there's other things we can show. For example, gold. Gold, same thing here. In New York AM swept previous session low, the London low, right there. All internet everything off, so don't get confused. We saw previous session, the London low. Now we wait for a Chosh. Did we get a Chosh? Bullish Chosh. Yes, we got bullish Chosh right there. Awesome. Do we have any FVGs? We have an FVG right there. So you can enter inside this FVG or you can enter inside the Chosh. I started recommending you guys to enter at the Chosh. And if it comes back to this FVG, you would add on to your position. Okay, you can add into your position or you do not have to add into your position. It's completely up to you. You would enter here, put stop loss at the low. And again, I don't know the ticks for gold, but I think one tick is $10. So you would aim for your $500, which is right there. That's all you have to get. Okay. Do not worry about the RR. Do not worry about the RR. Okay, guys. As the price goes up, you can move your stop loss exit to break even. Do you get what I mean? This has a high win rate and it's based on the way the market looks and the price. This is just a visualization. Nobody that is profited I know uses RR. Okay. Yes, it's realistic to do 1 to 2 RR, blah blah blah. But you see, on 4 out of 4 trades, all of them passed today. Anyway, this is the 5th trade, by the way, gold. $500, right? What you can do is you can continue to previous session high, which is our optimal terminus of this whole move. Okay, you can end it there for $800 and done, right? Now, if you want to be more fancy, you want to hold a little bit longer, you take a swing low, you have a low, lower low, higher high. Put it, your Fibonacci from here, you put it at this high, the high in between these two lows, put standard deviations on, and you should see the market should go to 1 standard deviation. So if you want to hold longer than that London, you can essentially target 1 standard deviations, which is right there. Okay, let me just show you like this. So if you still in a trade on this, look, it came very shy of. Okay, I don't always leave it at 1 standard deviation. I leave it 1 tick below. So this is 1 tick below. Look, this is 1 tick below. Okay, always do it, but it will still essentially come back to 1 standard deviation. All right. It will again essentially come back to this 1 standard deviation, and you guys can follow it live. All right, so let's leave this example for later and we come back to it and see if what we said that we projected was the market is going to do before it printed these candles, if it's going to do that or if it's not going to do that. And we're probably going to see if we close above it, we continue to 1.5 and maybe possibly 2. If we close below it with this immediate rejection, displacement, we'll probably come back to the equilibrium of this range, right? So from this low to this high, extend out the midpoint, we can expect a retracement to this level, all right? If we close above it, we continue up. If we close below it with displacement, we come back to this level, find support, continue going up, okay? That's for gold. Now let's check for USD Euro. I know you guys love this Euro stuff. Same thing here, guys. In New York AM, we start premium session low. Chosh, you enter at, you have FEGs, yes. So you enter at the Chosh candle right there, and you would probably target these highs or London high, premium session high. And but since New York 8 p.m. closed, this New York AM didn't get there fast enough, New York PM enough, you can start to take your partials, maybe hold a small runner or just hold the whole position. Okay, you want to go as you like. So you be essentially making you $500 and getting out. I don't care if the maximum TP is $10,000. You make you $500 and get the hell out. Okay, there's a multiple assets you can trade every single day. If you take one trade on every asset per day, 10 trades per day, you can make 500. That will also give you 5k. You get what I mean? Don't overstress it. Okay, same thing here. London swept premium session high, high, lower. This is just right there. You enter there and you can write it down. Let's see if that's correct. Yeah, high, low. You enter this Josh and you would target maximum target is premium session low, which is Asia low. Then you guys can see that this is gave you 30 pips or whatever this is. But you can see it's straight line, okay? Doesn't miss us. Now, we can show one example for crypto. Because today I had some people that they trade crypto even though they're sharing trades with us on on the futures channel. Same thing with crypto. New York AM, we swept premium session low. Rather, in New York AM, we swept premium session high. That's what we did first. We didn't sweep the low, we swept the high first. Step one, sweep a premium session high. Let me check if you guys can still hear me. Sweep of premium session high. Step two, Chosh. You enter the Chosh right there. Put a stop loss at the session high. During your time of trade, this is the session high. But since we moved up, the New York AM moved up. Let me just show you to prove to you guys. It should look something like this. See, New York AM is right there. You put the stop loss at this session high, and your maximum target is of course premium session low, and that's 1.6 RR. But again, you do not look at RR, guys. You look at $250 to $500. Get you $250 to get out, to $500 and get out. You see, every time we enter, thank God, it's straight line down, straight faster thing. There is no playing here. Oh, we're going long. Find 5-6 consecutive green candles. Oh, 5 red candles. Oh, 5 green candles. Big pump, blah, blah, blah. No, guys, this is consolidation, okay? What the market did here is we accumulated, we manipulated up, and now we distributing down. Okay, that's what it did. And by the way, on BTC, what do you guys see? We see a market maker sell model. Sorry, a market maker model. Original consolidation. We pump up. We're forming all these swing highs. Now we find a smart money reversal, probably one of IPDAs that I told you guys to draw. One of them. Today I'll show you again on the ES how we managed to catch that trade. And then probably now all these targets will become low resistance liquidity. Okay. I'm still not sure. I have to check it much more, but from what it looks like, maybe this is the original consolidation. My bad. This is the original consolidation. Okay. This is probably on a 1 minute. If I go into 1 minute, you can see this is a market maker model, buy model on the 1 minute, but this is on a higher time frame. Oh, this is a 5 minute and this is a 15 minute. Just try and see. Yeah, you can see. Original consolidation. We go down. We test the original consolidation. We go down. We go down. This is first retracement. We touch the original consolidation low. This original consolidation right here. And then we distribute again. Now we find smart money reversal somewhere around here, important level. And now all these targets, this high, can be your partials, right? Now, so now we showed on every single asset today how it beautifully works. I showed you guys the results that have been consistently going without a loss. Thank God, probably don't want to jinx it. Going consistently, okay? So that's what I wanted to show you guys. Now what I wanted to show you guys is now we're gonna go into some fun stuff. Now we go to market maker model and then we end the stream with previous cycles. Okay, previous cycles is amazing. You guys can use it all the time. Okay, it's simple as plotting 3 lines. Sorry, 2 lines. Wait, 2 vertical and 2 horizontal. That's all you have to do. Okay. Now this is weird. So let me just turn this off. Let's go back to ES. Uh, hold on. Okay. All right, guys. So let me turn everything off right here. Show you guys. I want to show you guys market maker. Market maker. Why can't I speak? Market maker buy model. Okay. So where were we? In London, right here. Okay. So yes, we took swept previous session high, charged FEG, we entered, we took our profits, blah blah blah. Or we didn't enter. I can't remember, to be honest with you. Anyway, here. Okay, what do you guys see right there? This is a market maker buy model, right? Why? Because I printed it and sent it to the chat. I told you guys this is the only trade where you can hold your position to the maximum, to the terminus of this position. You can hold all your contracts. You don't even have to take partials. Okay, the market will go there even if everybody's shorting. And we proved it today. We proved that today. Okay, there's no way the algorithm will allow price delivery to go downwards if it's hinting that it wants to go up and complete this model. Okay, there's no way. Then after it took it, you see how it crashed so fast because it wanted everybody wants to go short. Everybody, all the funding, all the funds, all the hedge funds, blah 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 banks, they want to go short, but the algorithm is not allowing them. The moment it allows them, look at this big crash. Okay, big crash. Like a knife. I don't know, you guys. Swiss knife, Turkish knife, American pie. Anyway, so here the market going down, market going down, market going down. Sweep. Josh, you can enter there. Oh, we saw that. Yeah, we did sweep. Continue going down and then down. And I told you guys, pay your attention to this area here. Our targets for the shorts are, I posted it in the channel. You can go back and check it. This level and this level are IPDA levels. Okay, they are old levels. They're really old levels, old highs and lows based on the IPD. It will reflect back to them for 24 and 60 days. You can see we're still using them now from a month or so ago to the tick. You can see how we're using it as resistance, we're using it as support right there, we're using it as resistance, using it again as resistance, The market open gap was to that line. Now we use it as support, and now we come back to it. So while everybody thinking after this trend, beautiful trend, this is so obvious trend, right? This is such an obvious trend down, right? This is such an obvious trend up. It's obvious trend down. I told you guys, pay attention. The market will high likely, very high, with a high. Fuck's sake, I can't speak to that. I just woke up. With a very high probability, the market would probably reverse around here. Okay, if not on this line, probably at this line. You can see it went down. I told you guys you might be able to total soup this. We have an important level and an FEG. You can enter right there at this FEG with this level and then hold it all the way through. Okay, but we don't want to do that because sometimes that wins, sometimes that doesn't. At this point, I told you guys also in the chat, I told you guys at these levels, at IPDA levels, at previous cycle levels, which we'll go into in a bit, that's usually where the smart money reversal happens for a market maker model. You guys always wonder, okay, I can find the original consolidation, I can find these highs, but whenever I try to find an entry, it just keeps going more and down, more and down, more down and more down and more down. Like I can't find a smart money reversal. Your job is not to find the low. Your job is not to find the low. But this would give you a very high uh, likelihood that you will be able to catch these lows, and you still don't have to catch it around here. You just have to know that okay, this is enough. The market algorithm delivered enough to my liking in order for me to start looking for what I'm looking for. I'm going to go into that in a second. So at this point, once we saw this displacement up, we respected it. We displacement up, we used it as support right there. I told you guys, okay, we want to wait for this chosh. Okay, you can see there's a low, lower low, low, high, lower low. So this is a swing high. After taking the liquidity, got the swing high. So this swing high is important for us. Okay, or the swing high, they're both right. We're probably gonna get Josh there. Oh, there we go. Got Josh right there. Okay, so you guys still don't enter. If you don't want to turtle soup this, wait for confirmation. I told you guys, for those who know me, when I trade a market maker buy model or sell model, I always try to enter at the inverse FVG. So what do you want to see? You want to see smart money reversal at the key level, a bearish FVG being closing above it and using it as support. So if I draw this, yes, you hear that right. A bearish FVG, we're using it as support. You can see the market went straight into use it as support. Once again here, yes, it's a bearish FVG. Okay. Yeah, you can enter there. That's your first low risk entry. Okay, but still, you don't want to enter there. No problem. Wait for the chosh. Okay, chosh right there. You got a chosh right there. Awesome. Now, once you get the chosh, I told Jessica, I think, or someone, or you guys in the chat, and she asked, "How? Like, what do you mean by that?" There's a tip that I'm teaching you about market structure shift or change of character. Okay, pay attention to this very closely. If we have a swing high that we expect it to be a chosh, a bearish chosh or bullish chosh, and to the left side there's a bearish FVG. Suppose for the bullish, we want to take a bullish trade. If there's a bearish FVG and this swing high, this intermediate swing high is inside of it, and we break it strongly, almost 70 to 80% of the time, the market will come back and fill this FVG that is left behind. Okay, it will not continue going up straight away. So I told you guys, normally we can enter the chosh, but I told you guys, I want to enter at the FVG. The market went straight to our FVG, this FVG right here. You can enter it right there on this FVG, and this FVG will be respected. It will, algorithm will make sure this FVG is being respected. You see not a single body, the body is not even touching it. The body is not even touching it. Okay, there's no single body inside here, only wicks. And where do you think this wick went to? To the probably the midpoint of this FVG. So you can enter there. You can have a possibility to enter here, here, or here. I think Amina entered very lately, and she still made money. You enter right here, and you would target every single high of these are low resistance liquidity runs. Okay, every single high here is an engineered liquidity. Some of you ask, what is market maker models? The market maker model, every single time the market moves, is based on a market maker model, either on a smaller time frame or a higher time frame. Every single time it moves. Okay, every single time it expands, it's based on that. What is job, guys? What is job? This job is to form liquidity, is to engineer liquidity, right? So we went high here. Some people are going to be shorting here. Market goes down. Some people are going to be trading their stop loss. Okay, to this high, swing high, to this swing high, to this swing high, to this swing high, to this swing high, and they'll be back profit. Oh damn, yeah, we have a supply zone here. We have resistance here. The market is going to keep going down. Oh my god, probably the hedge fund. Okay, now what that market maker model did? It engineered this. It makes these swing highs for you to put your stop loss on. If there's no swing high, nobody's going to know where to put a stop loss. So it engineers these swing highs for you. Okay. To add it, look how much nice to put your stop loss here. Would you put your stop loss here if you're short? Yeah, I would put it. Look how bearish these candles here are. Right, very bearish, very aggressive candles. Right. Why would the market go up there? It wouldn't until the right time. Once we get a smart money reversal, all these highs are now in crosshairs. Right. So while you guys, the algorithm would now target every swing high because people is going to be trading their stop loss around here until this model ends, which is the origin consolidation. This model will continue going up. I don't care how many people in the world are shorting, how many hedge funds are shorting. The market will continue going up. Okay. NQ was dying to go down. It couldn't. Okay, it couldn't. Right. ES was also it couldn't. Once the model complete, the market was able to crash. Now, what was I gonna say? So you can draw a line, a semicircle here, a semicircle there, and this smart money reversal, which is right there. The left side of it is the engineered liquidity. The right side of it is where you enter. So now, you ask me, how can we identify this? It doesn't look like very simple. You know, probably if you check market maker models on the internet, you would see something like a box, a box, a box, a box, a box, right? That's not how the market moves. Okay, that's just a schematic. Some of you may not recognize this as an original consolidation. So what you can do is go to settings, and I'll make this better. Go to settings. Hold on, I want to make sure you guys can still hear me. You can choose the colors you want. Okay, turn everything off. Now go to settings of this. Turn off the wicks. Okay, you can clearly see there's a consolidation here. You can see this market maker much clearer, right? Original consolidation. The first step of accumulation, and then distribution. Smart money reversal. First step of your accumulation. Second step before the first big move. Okay. So you can always do that. There's many fancy ways you can do this, guys. All right. Now, how much further? Why did the market go all the way up there? Right. There was this draw which we couldn't get to, unfortunately. But If I take my Fibonacci, but at this high, standard deviations, we'll see that the market, this model will end at 2 to 2.5, okay? It came to 2.5, probably the midpoint of it. If I measure the midpoint of it, I'll probably get that high, okay? Nope, it didn't even come back to there. 2 to 2.5 standard deviation is where the market would most likely, more times than not, it would probably reverse, okay? It would probably reverse. Right, my bad. It would probably reverse, as you can see right there, okay? So it's allowed to go up here. So now you might be asking me, look, what is standard deviation? Well, from here, this swing low to this swing high, to this, from this whole range, sorry, to here, it's 1 times, okay? If you draw this whole box, copy it, it will give you 1 standard deviation. Copy it again, you'll get 2 standard deviation, all right? And it goes like this: -1, -2, -3, -4, -5, blah blah blah. Can go all the way up to 11, -11. Now, some of you might be asking me, okay, look, why we use 1, 2, 3, 4, 5, but we also include the -2.5? What's so special about it? Well, guys, the algorithm, what is the point of the standard deviation? The standard deviation is to show the algorithm its limitations. It's allowed to do the same move, the same range. It's allowed to move in a way that's maximum double this range, okay? It shouldn't do much more than double, right? It shouldn't do triple this range or quadruple this range, right? Then it will become a trend, right? They don't want trends. So it's allowed to move 2 times this current range, okay? Now, then what's the 2.5 for? Well, because after it goes to 1 standard deviation, you can see how accurate it comes, right? Look, 1 standard deviations, okay? We go back to equilibrium of the range, okay? We immediately displace down, okay? It respects it. It respects it. You can see the bodies right there. You can see the wicks right there. It respects it, okay? But after 2 standard deviations, if you zoom out and turn everything off, you would start to see that, okay, looks like a trend, right? If I do it like this is looking like a bullish trend, right? So when you get a bullish trend, then you cannot, the efficiency of controlling the price would lose. It will become drastically much lower. Why? Because now more people are foaming in. It's harder to control more people now at this stage, right? Because now it's a trend. So they allow this small buffer of 0.5% to allow it. So it won't go straight to 2 in reverse. It's allowed to go to 2.5, to anywhere inside this range. Okay. And even so, it will still respect the quadrants. So if I do it like this, I presume it should still respect the quadrants. It came back to 2.25%. Okay. And then rejected from that. Right. So that's just a tip you guys can use, because I know you guys love standard deviations and use it every single time, but this is important to keep into your mind. Now, that's market maker models. Okay. Market maker models. Now what we can do is, now we can go finally onto something called the previous cycle low and high. Okay, previous cycles are extremely important algorithmic levels which are timely based, and they probably rarely showed. Okay, ICT tries its best not to share them, but I think some people started to leak them. So here is our chance to go over them. So I'm going to go on this thing here so I can delete everything on the chart. And yeah, this is beautiful because it's easy to apply. Okay, what do you want to do, guys? Now, ICT has been hinting at this for a very, 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 very long time. Okay, he was saying that there's this cycle from 7 a.m. to 8:30 a.m. Okay, something happens in the algorithm through this time. Okay, and what he was trying to say is this is literally just a kill zone, right? Probably, I don't know what kill zone is. I think the London close, London or New York open close, New York open kill zone for the Forex peeps. We're still boxing futures. But he was hinting at something else. He was hinting at what? What do you guys see from these numbers? If I zoom out. 7 a.m. to 8:30 a.m. How many hours are there? Is it a single hour? Nope. What is it? It's 1.5 hours. Okay. So it's a 90-minute cycle. He was trying to hint about this for a really, really, really long time. Those with think outside the box could figure out. But 7 a.m. to 8:30 a.m. is a 90-minute cycle. Okay. Now, That's exactly what he was hinting at. That's a cycle. Not 1 hour, not less, not more, not a whole session. 1.5 hours, or in other words, 90 minutes. Okay. Now, and that's probably as much as he could have hinted. Now, from 8:30 plus 1.5 hours will give you 9 o'clock, 11 o'clock, right? 11 o'clock, right there. Now, you move more again from 11 o'clock to 1 o'clock. Again, no, from 1 o'clock, so 11 o'clock to 12:30. Hold on. Sorry, guys, my bad. My bad. Wait, hold on, man. 8:30 plus 1.5 hours is 9. It's 10, right? My bad. My bad. I'm bad at math. It's 10 o'clock. Okay. From 10 o'clock to what? To 11:30 is another level, right? 10 o'clock plus 1.5 hours, 11:30. From 11:30 to 1 o'clock is the other cycle. From 1 o'clock to God, I hate math. 2:30, and then finally at 4 o'clock. Okay. Now, okay, these are single cycles, 90-minute cycles. The algorithm will do something through these cycles. Okay, and you can drop to the 1 minute. Every cycle, the algorithm will spool to the high and to the low of it and to the equilibrium. Okay, of the previous session. So now we draw all of them just to show you guys a look about it. But how would you trade this? This is exactly how we trade it. Let me remove everything again. Go back to 7 o'clock. And this was a confluence to our trade. 3 o'clock, okay? Now, go on the 1 minute. Now I have to go on NQ by then. Sorry about that. Right, friends, some points. So fun to trade as well. Because it gives you bias, it gives you protected highs, it gives you protected lows, it gives you targets, it gives you patience. And most importantly, it gives you time. So, this is from 7 o'clock to 8:30 o'clock. This is our first 90-minute cycle, okay? Now, what did we do? Right there. You want to mark the lowest low and the highest high from this cycle, from this orange to orange box, this 9-minute cycle. So where is it? Oh my god. Just pop it. Here. Draw a line. This is the high. Draw a line. Okay. Now, label it previous cycle low and previous cycle high. Okay. So let's just select it out. And sorry, and the midpoint. Okay, you don't have to worry about the midpoint too much, but you have to worry about. You can do it. Now, after you get the hang of this, you can start looking for the equilibrium to take partials as well. So, but before we get into the equilibrium, you want to wait for the market after this cycle finishes. So at 8:30, this cycle finished. Now we are in a new cycle, right? But not new cycle. Now we're after 8:30. Now your previous cycle becomes this one, right? 7 a.m. to 8:30. So you want to be waiting for the algorithm to target for the market to sweep the high, previous cycle high, or the previous cycle low. And once it does either one, your target is the previous the opposite one. So if we separate previous session high, previous cycle high, our target would be previous cycle low. Okay, that's it. That's it. It didn't much further right now, but you can see how beautiful it went straight to it. So here, after 8:30, we start waiting for the sweep of previous cycle high or the low. We swept the previous cycle high right there. Okay, nice. Now we wait for a chosh. We have a high, lower, low. A close below these lows would give us a chosh. Okay. The market continued going up. It gives us forced rally. We were expecting it because it's accumulation, manipulation, distribution. But forget all of that. Okay, just you can see how many stuff you can combine. It all makes sense at the same time. ICT has 81 different ways to enter the trade, the market. And you might be asking, do I use the end unicorn? Do I use the order block? Do I use the midpoint? Do I use the concept version? Do I use the breaker block? Blah, blah. You can use whatever you want. You can see all of them at the same time sometimes. You can choose whatever that is viable to you. Okay? Don't worry about it. This is just extra confidence. You don't have to worry about it. The market doesn't. I mean, for your trade, you don't have to worry about it. Okay. We set the previous session high right there. We wait for a chosh. Okay. We wait for a chosh. Market went down, went up, went down. And on the 5 minute, you would get a chosh somewhere around here on this candle right here or on this candle right here. You would enter here and you would target. You can put your stop loss anywhere here, whatever you want to do. Okay, I'm going to show you this. This is a very big stop loss, but I'm going to show you something, a nice thing about the cycles. And you target driven cycle low, and you can see it running straight to it. Okay, now you do not have to put your stop loss around here, guys. The beautiful thing about cycles are that is the fact that they are protected. You probably heard of the word protected. I mentioned it on Friday. I said this high is protected. Everybody was trying to go long. I think BK, and everybody was trying to go long. I was telling you guys, I'm gonna go short, and I'm not gonna take a single profit. Okay, we made 5K. Some people even joined the accounts on the XFA and on the combines. They all made 4-5K as well. I told you guys this high will remain protected. This previous cycle high, it will remain protected. Price will not go over it. Okay, the algorithm will make sure the price is not gonna go over it. So you can put your stop loss just like that, just like that, and you can take your trade. Of course, it went much further down, but your aim is previous cycle low, from previous cycle high to previous cycle low, from previous cycle low to previous cycle high. Okay, just like that. And something else you want to know is you see the previous cycle high, the body of it, the whole candle, not just the high. Take it, the whole thing. Extend it out. Okay, like that. The low, like that. Okay? So you can use these. You can use this, guys. You can see until the next cycle. You can use these levels. So it's 8:30. It ends at 10. So at 10, really, we didn't really use it, but you can draw these out and use it as support resistance, right? So you can put your stop loss instead of the high. You can put it above this here, right? This box here. You can use it as a real resistance and support. Okay, real resistance and support. See. All right. So what you can do is you might not wait for a chosh. You might wait for that price to go up, sweep the high, and then as soon as it breaks this level, right there, you can be entering short there. Okay, on a lower time frame, for example. Now, same thing. You can go ahead. We finished the cycle, right, guys? We finished the cycle. Let's say now we finished the cycle. We took our trade. Now we're beautiful. We do not take any trades. We wait for the new cycle to finish. So 10 a.m., 8:30 to 10 a.m. This is a new cycle. Okay. This is a new cycle, and what we're gonna say? Okay. So now previous cycle. This is the freshest cycle. You always look at the previous cycle. You remove all these. You can keep them on. For the past two cycles, you can use the same levels. I pretty much don't really look at them. What I look at is previous, then the fresher cycle. Okay, so again, what's the highest high here? The lowest low here. Okay, and you would wait for the cycle to sweep. Niye koydun kanka ya? Bu kafa dişlerini ben içmedim. Bir saniye arkadaşlar. Bu kafa ben içmedim kanka. Bu yeni kafa alacağım. Sorry about that, guys. They put coal on my thing. Anyway, so we wait for the sweep of previous cycle high or previous cycle low. I told you guys today is going to be a ranging day. Okay, I told you guys today is going to be a ranging day because we did a double purge on the 5 minute of the previous session high and the low. So we're going to consider in the middle. Okay, I said everything in the chat. You can go ahead and check it. So I don't expect any big movements. But going back to here, you would wait for the market to sweep this high or this low. Okay. Now, yes, you might be asking, look, this is just that swing high and this is swing low of the whole range. No, this is just for this specific cycle. Yeah, that was the case. But as you can see here, this was the low. This is the low. Sorry, where's the low? This is the low we use, and this is the high we use. There was this low. There was other lows, right? It doesn't matter. Okay, for this cycle, for this one, it's very big range. Okay, we expect nothing. So while we're waiting, 10 o'clock, where's the next cycle? 10 o'clock plus 1.5 hours would give us 11:30. Okay. Okay. 11:30. Same thing. Where's the high? This is the high. By the way, I didn't test this. I'm testing this out with you guys right now. I've only took the trade on the first cycle, but I just want to show you guys because I don't want to cherry pick stuff. If it works, it works. Doesn't work, it doesn't work. Previous cycle high, and where's the low? From here all the way to here. This is the lowest low, right? Beautiful. Okay. Previous cycle low. So this cycle, this here, 11:30 plus 1 minute. Now we can start looking for trades. What did we do? We wait for a sweep of this previous cycle low. We went above it, below it right here. Just think of like sessions. We went below it right there. I'll make this bigger, thicker. Everybody likes thick. We went below it. Nice, we swept it. Now you can find a chosh, or you can the turtle super. You can find a break order block. We have a low, lower low. Oh, I really can't see from this calendar. No, we don't have nothing there. You can wait for a chosh, which is right there. Take your entry, and you would target previous cycle high. Okay. You get right there. That's it. You take it right there. Okay. That's your TP. You would find your entry anywhere around here. You wait for a chosh, for example. You waiting for this chosh. We have a low, lower low, higher high. This becomes a breaker. This whole thing becomes a breaker. These all consecutive candles. Yes, all of them because they're consecutively green, not just the highest one. That's strong ICT teaching. You can find your entry right there, or right there, right on this candle right there, and you can target here. Okay, something like this. You probably have zero drawdown. Stop loss below where? Not the swing low. Doesn't have to be below the previous cycle low. It is a protected low. It will not be taken out until the objectives be taken. And boom. Okay, done. I'm not cherry picking things. I promise you guys. I swear to God, I'm doing this with you guys live. Every time I go do something, it's mostly live. Otherwise, except when I'm trying to show a trace already took. Okay, and the same breaker. Boom. Continue. Now what did we do, guys? Now what did we do? Oh, previous cycle high. We did previous cycle high. High, higher, high, lower, low. There's a chosh here, I believe. Oh. I would wait for the break. Okay, we broke it. So we have a chosh here. Now we can target previous cycle low, right? This low here. Okay. It would go from cycle to cycle. So from cycle low to cycle high, okay, etc. However, pay attention, guys. Pay attention. This is the end. We ended this cycle. Hold on. Where's 1 o'clock? Right there. Now we have fresher targets. We have this low, and we have this high. Okay. We have two. So we have two PCH, two PCL. Okay. Like I told you guys, you can use the previous session only, or you can use the maximum two. So 1, 2. Okay. The high of this session, sorry, this cycle, and the low of this cycle, where is this one? And the previous cycle, so the fresher one, the high and the low. So now we have two targets to attack, right? We took the previous cycle high, and we took the previous cycle high. So you would expect the market to start spooning very, very fast. As soon as we get a chosh, I think somewhere around here is the chosh. Let's see. We would expect a trade something. Where did we enter? At this chosh right there. Put the stop loss above this previous cycle high, somewhere like this, and you would target this here and try to catch this trade until 2:30, until the new cycle, until the beginning of the new cycle. Okay, so something like this. Okay, the market will start spooling until one of these levels. Okay, you can use them both, but essentially the market would go to either one of them. Okay, high, higher high, lower low. Okay, and you should see the market go. So this could be your live trade, right? You should be you're only risking $38 to making 5 RR, 200 ticks. 200 ticks. You can see how the market moves straight to it, okay? It might come back here, fill this FVG, come back to equilibrium. Where's the equilibrium, guys? Well, this swing low, previous session high, previous session low. This can be your TP. This can be TP1. This can be your area where you go break even, all right? So you can go, oops. You can see how simple is it, right? TP or break even, TP1, blah blah blah, put it there, equilibrium, because we expect a retracement from this here. We already gave this retracement here, so I don't think it's going to hold. It's going to continue going down, probably to previous cycle low. Okay, just like that. And you can use this as resistance. So PCH, take the whole candle, extend it forward. That's your supply zone. Okay. The other one right there, you can use this high, put it there, and move it up. Since we have two, your stop loss is protected by two previous cycle highs. Okay. Hopefully we go down here and continue going up. Okay. To be safe, you can just leave at this swing high because I know some of you are not going to be comfortable leaving it around here. Just for the sake of this video, I'm going to leave it where it was, above the previous cycle high, the second one, and let it go. So once we go to TP1, we go to break even and hope to go to PCL. All right, the market should start flushing soon, but it's a ranging day because I outlined the market maker model. We swapped the Asian the previous session high, we swapped the previous session low. Both Asian and London high, and both Asian and London low. This is a double push, so the market will start to what do you call it? It will start to consolidate between these sessions. So if I remove everything, this is double push. We swept the high, we swept the low. The market will just spend hours and hours consolidating until it decides to take a position, a direction, up or down. Okay, so just like that. Okay. You can use on everywhere. You can. Oh, hold on. Let me just fill this out, guys.